educating investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
And coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 25 minutes to go until the start of trading, and quite a week we have going on. Negative action to begin things. We get a bump yesterday. Today, coming into the final trading day of the week, markets in positive territory. Pretty weak retail sales number, missing the mark. We were looking for a rise of about 1% in the month of April. That was following a big number in March, and we got a flat April on retail sales coming in. We'll jump over to that in a moment, but taking a look at the markets, you got the S&Ps right now up 26 points, trading at 41.33. Pretty interesting how the market just shakes it off no matter what, right? Now, it didn't shake it off early this week, right, in terms of negative action. I'm going to jump to the S&P right away. We're going to put it on a daily. Pretty well-defined channel line, folks, and we're just bumping around between the upper and boundary and lower boundary lines. You make it down to a low of 4,029 yesterday. From there, we're up more than 100 points in the S&P, trading at 41.33. I mean, pretty well-defined. We came pretty close to that trend line. Now, technical analysis is an art sometimes and not a science. Okay, we're going to activate this drawing. Where does that trend line fall, right? I mean, it's pretty easy that you can line up the lows of where we go, and you came right down to that level. But we also got two lows that didn't quite come down to that level. A little linear regression. Maybe that line's a little bit higher. Maybe we're bouncing right off of that channel line. As you can see, we've done it on one occasion, two occasions, three occasions, and that's just from the run we had when we started in November, folks, when the S&P was trading at about 32.48. We're trading at 41.34, and we're up about 27 points. We're actually above almost where we were prior to that retail sales number. Let's zoom in on the action to see the 830 bar, and I'm even going to put it on a 5-minute to see where we were. There's your volatility, and we're sitting literally almost to the tick, folks, of where we were prior to that retail sales number. NASDAQ 100, tech stocks pulling back this week. We'll pull up the daily to see the action we have on tech stocks. 14,064 with a high ending April. Things really accelerated on Monday. You trade from a price level of 13,751. We're still down about 500 points from that price level, and that's after reaching a low of 12,914. I mean, think about it, folks. We ended Friday's action of last week at a closing print on the NASDAQ 100 futures of 13,717, and we trade down almost 800 points to the lows yesterday. And since then, though, we've now bounced more than 300 points, 13,237. It'll be interesting market open, folks, to see whether some of these trends hold, especially on that weak retail sales number. We get the Dow. Now, the Dow channel really had accelerated above its channel line. We had come back and tested that level and risen again. Always interesting when you get round numbers, folks. Following my program every day, Basil Chapman, Tiger Technicians Hour. He loves those round numbers. 35,000, the print. Nothing like it on the Dow. That was Monday. And guess what, folks? Just like that, how about 33,200? Talk about round numbers, right? 1,800. Simple math, 1,800 points the Dow trades down from Monday's high to Thursday's low, and just like that, we're up almost 900 points in the Dow. Mammoth moves in a big way. The VIX right now trading at 2116. You see the area we got to, 1538. There was a lot of talk down here, right? We heard the talk about huge VIX trades being put on. What was that big VIX trade that got put on? It was a call spread between about 25 and 40. Well, just like that, we got up to almost 30 yesterday. 28.93 was the hint. Was the print, excuse me, and just like that, we've pulled back a bit. You're trading at 21.18 on that VIX. The VIX, I tell you, if you're ever trading the VIX, folks, and you get a volatility spike, and you get your VIX way above the level you're at, no matter how you're trading it, maybe you're trading the UVXY, right? Maybe you're trading options somehow, take your money. Because the VIX they're always short-term, no matter how far back you go. Now, this doesn't even incorporate the COVID spike highs. You pull things back to get the entire COVID run of things. We were sitting at a price level, look at that, February 17th, 1421. Come into the next week, and kaboom, we were at 50 almost, 49, 48. You make it to 85. But as you see, highs are always followed by a pullback in the VIX, folks. You know, markets tanking does not last forever. The VIX was almost at 30, and just like that, we got a 21 print. Okay, jumping around to the news, let's start it off with the retail sales numbers. So sales stalled in April after stimulus-aided surge. Interesting when you look at the action here. So there's the number we just got, a 0% rise month over month for the month of March. Now, this is month over month. They call it the base effect, right? Year over year, ridiculous numbers because we're going back to COVID when just numbers were so weak. While month over month, it's a little difficult when you're going against a month where you just had almost an 11% rise. But folks, we're coming out of quite a doldrum in terms of where we've been. We need some rising numbers. So we're now seeing that sales in April were on par with where they were in March. Now, keeping in mind, we have more stimulus that came into things, right? That was the first month maybe we're really coming out of things with the vaccine beginning to take effect. But boy, there's two numbers now where we have no increase in retail sales for the month of April from March, and you also had only 266,000 jobs added for the month of April versus the month of March for non-farm payroll numbers. Those numbers are going to have to increase, folks. We have to make up more numbers than what we made up in the month of April. Now, the other side of that is vaccines are just coming to be, as in they're just making impacts to really bring down the numbers over the last 2 to 4 weeks, essentially. And they're going to persist, hopefully, as people get over their hesitation to get the vaccine. It's safe, it's effective. Get out there, folks. People are making those decisions. I know there's still some hesitancy, but that way we can all get together. It's a big deal. But these numbers, the market's not worried yet. But the anticipation is just going to build month after month after month because sales need to rise. They've pulled back for a bit. Your total value of retail sales, a record $619.9 billion in April, supporting economists' forecast for a strong household spending for the remainder of the year. Consumers may begin to shift more of their spending to services such as entertainment. 8 of 13 retail categories registered declines in April sales. Did you get that? With the largest percentage decrease at clothing stores. Purchases at restaurants and auto dealers increased. So, largest percentage decrease at clothing stores. Are we not purchasing clothing as we're going to come back out of lockdowns? Some dicey numbers in here, but the market shakes it off. We get the S&Ps just waiting for the opening bell right now. We're up 25 points, kind of right where we were coming into that opening bell. All right, what else we got going on in terms of where we are? Europe right now, positive territory. You have the DAX up about 0.8%, so pretty comparative, right? You get the S&Ps up 0.6% right now. You get the DAX over in Europe up 0.8, FTSE up 0.8 as well. Asia had a big night. Nikkei up 2.3%, Shanghai up 1.7% over there. And let's jump around to some of the commodities. We'll start it off with gold. Gold accelerating to 1837. We had a high on Monday of 1846. We'll put this thing on a weekly to bring it all the way back from the COVID lows of about 1450. We trade to 2089. Gold bounced off the 618, and now we're bumping into that 382. Interesting. The 382 was an area of support when you back it up to maybe where we were in September. We've bumped basically right to that line, folks. The high that we had of last week, the still weekly, 1844.60. The high that we had this week, 1846.30. 1845, a little bit area of resistance. I mean, we've just come from 1677 in the gold contract. That was the week of March 29th, so about 6 weeks ago from 1677. We're up about $150, $160 right now on that price level. That's almost a 10% pop, maybe a 9%, 10% pop over the last 6 weeks in gold, 1837. All right, folks, stay tuned. We got a lot to talk about. We got Disney earnings, they're pulling back. We got Coinbase. We got Airbnb. We got DoorDash. Right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have S&P's up 25 points right now. NASDAQ up 136. We have the Dow up 138. Jump into Disney. So Disney, tough miss last night on their earnings. We have some Disney in my newsletter, Rocket Equities and Options, for disclosure. We're trading down about $6 right now. We'll zoom in on the action. Disney getting a little bit of a lift over the last about 15, 30 minutes as we've risen from about 170 to 173. Always interesting how some of these equities, when they trade on earnings, we really find out how they trade when supply equals demand on the opening bell and volume comes into these equities. We have Disney right now, though, down about $6 from their earnings last night at 172.74. You spiked initially to 168.93. Disney, it's all about Disney Plus, and they miss on subscribers, following basically what Netflix did as well. Parks revenue still hurt by COVID restrictions. Should make sense when you got limitations going on. I think Disney's got only 25% capacity going on in Disneyland out in California right now. Second quarter results Thursday night. Last night, lower than expected revenue and subscriber count for the streaming service, and it was a pretty big miss. They have 103.6 million paid subscribers. It's a staggering number when you look at where they started in terms of only starting this service about a year and a half ago. Earnings per share, 79 cents versus 27. Revenue, though, a miss, 15.61 versus 15.87. They were looking for 109 million, so they almost missed by 5.5 million subscribers. That's a big number. You can't overstate. Big number and a big miss. The streaming service had been bolstering the company's success as it was losing out during COVID restrictions, but it seems the rapid growth is starting to slow, as CNBC article puts it here. Still, the company reiterated its plans to see between 230 and 260 million subscribers to Disney Plus by 2024. This quarter's numbers were exactly as we projected internally. So no disappointment here. Interesting to see how that plays out. I mean, you're seeing a little bit of a battle of it this morning as you're seeing numbers rise. Okay, so you have analyst estimates looking for 109. You have their CEO, Bob Chapek, out there saying that, no, we were talking about we might see a slowdown this year. The average monthly revenue per user dipped 29% year over year to $3.99, which the company attributed to the launch of Disney Plus Hotstar. The service has a lower monthly revenue per subscriber than traditional Disney Plus in other markets. I believe that's whether it's India and some other areas. So that's going to pull down the average of revenue per user across the entire company. Disney CFO Christine McCarthy said the company's earnings call that excluding Hotstar, average revenue would have been $561, so really pulling it down. The company said it now has around 159 million total subscribers across its streaming services as of the end of the second quarter. Revenue for the direct-to-consumer business grew 59% to $4 billion, which helped offset losses in their parks business and movie theater business. Disney announced it's also extending its MLB contract through 2028, that it signed an 8-year soccer deal with La Liga, maybe? Not familiar. So, the parks, let's get into it, all right? That segment fell 44% to $3.4 billion. I mean, folks, the parks, it just ain't back yet, right? It's just not back yet at all. It's all about the future, when they're coming back. It's really not about what they're doing in the last 3 months at their parks business. Company said the outbreak cost the division around $1.2 billion in lost operating income during the last quarter. That's income, not revenue. Income, $1.2 billion. Disney recorded a one-time $414 million charge during the quarter for impairment and severance for the planned closure of an animation studio. Yeah, so they just reopened its 2 California-based parks on April 30th. It's only May 14th. They've been open for 2 weeks, folks. They were shut down for 14 months. Let's see. Content sales and licensing revenue is falling across the board. So it's going to be a battle here in terms of figuring out where the market thinks they're going to go in future months. I mean, that's a great thing about the market right now. There's so much volatility because there's so much uncertainty about the growth trends of all these companies. In any other world, you can peg the growth rate, and then you can take that growth rate and analyze what you're going to put a valuation on the company for a growth rate, right? You're valuing their future expected growth of earnings and revenue, and you're using that to create a present value of the company. What's so difficult right now across the board on so many companies, whether you're a work-from-home company or you're kind of a reopening company, right? And Disney's definitely both of them. They have both segments. They have the parks business that's been pummeled. They have the streaming business that's accelerated. It's so tough to gauge what trends are going to hold and what trends are kind of anomalies as we open back up. Is this an anomaly that Disney missed that subscriber number because they kind of front-loaded some of the acceleration and growth they got? Or is this a sign of things to come, that growth is waning and that will last in future months? We're going to see it play out potentially, but Disney down about $6, could be down more on quite a miss of about 6 million subscribers, but we'll see how they open up this morning. All right, let's jump around to some of the other equities. Excuse me, with earnings so far this morning. Jumping around, we'll jump right to Airbnb. So Airbnb, I believe this is, let's jump. Is that there first? Yes, it is. No, let's see. Hold on. Is that their first? No, it's not. They were out with earnings already. I was going to say, was that their first earnings release as a public company? Not quite the case. So Airbnb, talk about a pullback, right? We were just trading at a price point on April 29th of 182. You come into those earnings at 135. Is that right? Let's zoom it in because this thing accelerated higher on the close. Yes, it did. It accelerated. So it got a print last night of a close of about 136.19, give or take. You see the volatility on their numbers. We were trading at 132 coming into that. Within about 2 hours, you traded from 132 to 136. As I mentioned, we were just trading at 138. Airbnb, first quarter revenue rose 5%. Vacationers returned to travel. Gross booking value rose 52%. Now, this is, again, year-over-year statistics, almost meaningless in this environment, folks. Earnings, they lost $1.95 a share. Revenue, $886 million versus $714 expected. Just a mammoth miss. Increased year-over-year revenue followed a 22% decline in the fourth quarter. Year-over-year numbers just almost useless across the board right now. The company reported 64.4 million nights and experiences booked, up 39% from the fourth quarter. So that's what I like to see. Tell me where we're going from the prior quarter, not from the prior year, and up 13% year over year. Analysts have been looking for 62.5 million nights, so they booked almost 2 million extra nights than what the market was looking for. Booking nights dropped in every quarter last year compared to the same period in 2019. Not staggering at all. I don't know how that would not be happening with COVID. Gross booking value, Airbnb's way of tracking host earnings, services fees, cleaning fees, and taxes totaled $10.3 billion, up 52% year over year. Staggering numbers, and above the $7.87 billion consensus. Did you get that, folks? Gross booking value So that combines everything. That's service fees, cleaning fees, taxes, the whole deal, $10.3 billion. Market was looking for 7.8. How do you look for 7.8 and the number comes in at 10.3? Some of these analyst misses are just staggering. The net loss tripled as it repaid debt for loans it took out early in the pandemic, and the company continued to pay restructuring fees. Average daily rate rose 25% from the prior quarter to $160. 25% from the prior quarter. Makes sense, folks. It's a whole different world right now from where we were. Airbnb going to open about $1 to the positive right now at 136.50. You see the initial volatility on their numbers last night, but we settled kind of right where we were yesterday. And again, we'll see where we open on Airbnb. But man, you're coming into right near the lows that we had of 121.50. This thing goes public back in December. You run up to 220, and since then it's been a downward trip. But pretty strong numbers last night from Airbnb. All right, folks, we got the opening bell coming up. We got 3 minutes to go. We get the S&P's up 26 points. NASDAQ 100 up 137. Stay tuned, folks. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Markets are open, and we're getting a little bit of a lift on the opening bell. We got S&Ps right now up 32 points. We're above anywhere we were pre-market. You see the acceleration going on. These are 15-minute bars. Let's push it to a 5-minute to really see the pop. We're getting 41.40 on the S&Ps. Markets, they want higher price right now, following a retail sales number of a flat number in April. The thing to keep in mind there is there were lots of revisions in the month of March. So some analysts out there, some friends, were talking about the retail sales number. One point that a lot of people aren't making, that you should, in the analysis at least, is that the revisions for the March months would actually equal probably the misses, or that thereabouts, pretty close for the month of April. We were looking for a rise of about 1% for retail sales in April. You revised March numbers up a bit to bring it to a 10.7% number. I think the original number was 9.8. So basically all that happened was the number that they were looking for in April was actually in March numbers, just not there yet, revised upward. Nonetheless, you got S&P's up about 33 points right now at 41.39. NASDAQ up 140 points right now. Dow catching a bid as well, up 243. You're up 0.7% in the Dow. The Russell up 0.8%. Jump to commodities. Crude catching a bid, $64.86. We'll jump to gold, up $13 at $18.37, and we'll talk about Bitcoin, up about $2,000 at $50,355. Let's jump around to some of the stocks opening up after their earnings last night. We got Disney down about 3.5%, trading at $172.07. Now, I'm going to back things up a bit on Disney here. For a 3-year weekly, you make it to $80 at the lows of COVID. You come into COVID at a price level of about $146. You actually made it to a high in 2019 of $153.41. Folks, if you're looking to get in Disney and this thing makes it back to anywhere near this 153.41 area, I would definitely look to that area to add a partial position to begin a position. Not sure it's going to make it back to that level. I'm not. You're trading down a little bit. You're down 3.8%. I'm obviously in bull Disney. We have some Disney in there. But if this thing makes it back to 153, I may be adding myself to some of that area because the numbers are staggering on Disney. The parks will open back up. We were just at 203. If you get back 25% of this number, and it's play, folks. If you're a holder of Disney, you better believe that this thing could trade back to 153 now, because what's going on is we're below some pretty substantial support. I've been talking about it in my newsletter for my subscribers. You really accelerate to an area of 183.40 back in December. You then pull back to a price level of 160.52. You made it up to 203, but this area of about 180 had been some strong support right from basically February. We're now under that level of where we are. You're talking about a gap that would basically bring you right back to that 153 area, okay? That's talking about the entire gap we got from December. So it's interesting when you look at it, right? That 153 area is a couple different occasions on this Disney chart. You're talking about from December 10th, the opening print of that December 10th, 153.32, then you gap above. Do we go back and we fill this gap? Definitely possible with where we are right now. So that brings us just back to the price level we got in December. And then as I talk about, so there's your gap that I was just talking. Sorry, that's not. It's somewhere in here, this gap, because that's a weekly, as in 153, and that's probably what I'm looking at right there, right? So you're talking about the acceleration you got from November 30th, correlating to the highs we got back in 2019. But Disney, you're down 4% right now, trading a little bit lower on the opening bell to 171.18. Let's jump to Airbnb on their numbers, almost flat. On their earnings, 136.36 for Airbnb. We'll jump over to Coinbase. They got their numbers out. You did trade higher, but we're giving back some of those gains on the open. Coinbase up about 3.2%. That's the first time that they've come out with numbers as a public company for Coinbase. Okay, what else we got going on? What was I going to talk about? We got Airbnb. Let's talk about Coinbase. So revenue tripled from last quarter as crypto prices skyrocketed. So it's quite a valuation this company's dealing with right now. I mean, you're talking about, let's jump over to it. I think we're somewhere in the neighborhood of maybe $60 billion. Where are we at? $54 billion. They've fallen from the wayside, this equity. I mean, we were just at a price point of 300, which is probably, I had that number 65 billion in my head. You were up as high as 429, right? The reference price, which is a meaningless price that they chose when they push this out to begin trading, was $250. We actually made it below that level yesterday, 247.88 coming into earnings. Today, we're up about 3.3% on their numbers so far. And getting into it again, so they brought $1.8 billion in revenue, up from $585 million in the fourth quarter in 2020 and $191 million a year ago. I mean, look at that. Just staggering numbers. Now, some of these numbers were already hinted to when they went public, okay? Now, you just went public April 14th, exactly a month ago, folks. So we had some of these numbers circulating in terms of the revenue numbers. They're pretty dramatic. This stock has shown no signs of acceleration and strength to the upside, folks. Be careful of Coinbase, because there's no reason why the market might wake up a bit, that maybe the biggest exchange out there isn't quite worth $100 billion just yet. But they have earnings, $3.05 a share, and they got revenue of almost $2 billion. So it's a real company in a big way. Net profit for the quarter was over $771 million. Staggering. That valuation's coming from somewhere, and those are real numbers, more than fourfold. I mean, year over year, when they're looking at these numbers, just huge because of where crypto's going. Now, on the earnings call, the company said it had planned to list Dogecoin in the next 6 to 8 weeks. So they're going to list Doge. The Dogecoin bulls, they must love that. Doge was up 26,000% in the last 6 months before falling after Elon Musk's Saturday Night Live host debut. Now, Doge has their own articles going on this morning. Elon is out there pumping and dumping maybe again, but they're going to potentially be pushing that onto their platform. Coinbase's fate is tethered to the performance of digital assets like Bitcoin. 94% of the company's revenue in the first quarter came from transaction fees from trading. In an introductory note, the company noted that Bitcoin prices nearly doubled during the quarter and Ether prices almost tripled. Those trends may not continue, folks. Coinbase fees, which account for the bulk of the sum of the company's revenues, higher than some rivals. When asked about this, the CFO doubled down on the strategy, suggesting margins will remain high for the crypto exchange. We're not trying to win on fees. We're not trying to compete on fees. We're competing on being the most trusted. And they have a great point. I've used Coinbase myself in the past. I'm not huge into cryptos. I don't understand all the fundamental risks when you're dealing with exchanges that are unregulated, outside of our control. It's a risk that you better be realizing exists if you are in that sector. Coinbase, though, the reason why I went to them, I was fairly confident that they were one of the best avenues to use in crypto as somebody that wanted to decrease some of the risks associated with whether you're transacting, where you're transacting your crypto exchanges, purchases and sales, where you're storing as a wallet potentially some of those cryptos. We've all heard the stories that all of a sudden some exchange just goes offline and all of a sudden there's some type of Ponzi scheme, maybe the money doesn't exist, etc. So they're pretty proud of the fact that they're the most reliable. I'd say they're pretty aware and agree with that reputation they've built, and so they're proud of it, and they're going to emphasize that, and they're going to be able to charge for it. Monthly transacting users more than doubled from the previous quarter, from 2.8 million to 6.1 million. 56 million verified users, along with record-breaking pace. Now, here's the interesting part, right? Monthly transacting users. I haven't done anything on Coinbase in a long time, folks. I was actually in there, I think it's 2019, 2018. So I'm one of those 56 million. I don't have any plans to be back in there anytime soon, though. They got about 6 million people on a monthly basis doing business. Strong numbers. Coinbase, though, up about 2.3%, giving back some of those gains on the open. Stay tuned, folks. We're talking some DoorDash when we get back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I got a chart of DoorDash up here. We're up 10% on the dot today, but boy, quite a tough chart when you look at it. We were just trading above $160 coming into the month of May. It was a decline in one direction only, folks. You got a couple bumps in the market, which allowed DoorDash maybe to pop, but we came into yesterday's action making lows, all-time lows yesterday, 110.13. This stock just going public back in December, talking about December 9th, the first print on DoorDash. Talk about a little euphoria, up to 220 on a couple occasions, up to 156, just like that. The valuation cut in half. We're trading at 126. We're up 9.4% today. When you look at the fundamentals of this company, we're talking about $42 billion company right now. Remarkable valuation. But they get some big numbers. How about reported a loss of 34 cents a share, but they had revenue of more than $1 billion on the quarter. The company said that delivery drivers were in short supply, but consumer demand was stronger than expected. They raised the 2021 forecast for gross order value. Now, these are staggering numbers because gross order value can be a little bit distorted when you talk about their revenue, right? They have revenue of $1 billion. They're looking for gross order value for the fiscal year of $35 to $38 billion. Now, that's everything in terms of the food that they're getting. A lot of that revenue getting passed on to the restaurants themselves. But nonetheless, talking about doing almost $40 billion in revenue on a yearly basis for a company like DoorDash. That's gross bookings, not revenue. But you can see the type of impact they have in the economy. The delivery company recorded fiscal quarter net loss of $110 million or 34 cents a share, narrower than the loss of $129 million that they had a year earlier. Now, year over year, it's tough comparing those two because of how things different. Net sales rose 198% to $1.08 billion, topping the expectation in $993. Total orders reached 329 million during the quarter. Quite a number. Price controls imposed by different municipalities on the commission fees that DoorDash can charge restaurants erased 31 million in potential revenue, I guess. Let's see. The company reported expanding beyond restaurants into delivering flowers, pet supplies, convenience store products, and groceries. Orders in those new categories grew 40% compared to the prior quarter. Now, here's what I always pointed out, folks. I don't care about percentages when we're dealing with small numbers, okay? That segment grew 40%. Well, I'm imagining in the prior quarter that segment was a tiny, tiny segment, folks. DoorDash is not delivering a lot of pet supplies. They were not delivering a lot of pet supplies the prior quarter. They may be trying to ramp that up, but growing 40% over the prior quarter, although less than a tenth of active users bought from them in the first quarter. There you go. Customers who order from the new categories return to DoorDash more frequently over a 3-month period than those who only place restaurant orders. I mean, come on, that's common knowledge, folks, in terms of if you have customers that are using a variety of your products, they're obviously more engaged and more likely to use DoorDash. The company raised its 2021 forecast. As we said, you're talking about 35 to 38 billion. The prior number was 30 to 33. That's their entire gross order value, all the value of all they're doing. They widened its forecast range for adjusted earnings before EBITDA to between 0 and 300 million. The prior range was 0 to 200. So they're giving themselves a little bit more room to the upside. Nonetheless, DoorDash up about 10%, market like that. Seems like market was a little bit worried coming into their numbers, though, as you accelerated lower to 110 this morning. We're up. We'll jump to Uber. Uber getting a little bit of a lift with the market, but on those food numbers as well, I'm sure. Uber's really been struggling. Uber right now up 1.6% on their numbers. All right, what else we got going on? Jumping around to some of the companies. We'll jump to it. Let's see. Let's jump to Tyson Foods. So they sold its pet treat business to General Mills for $1.2 billion. The sale includes Nudges, Top Chews, and True Chews. Not familiar with them. We'll jump to Tyson Foods, TSN. There's a chart for you. Up to 81.69. You're up 1.4% today as they sell off that unit. And I think it was GIS, General Mills, right? Yeah, GIS is going to add those brands. General Mills up with the market as well, up about 0.2%. Excuse me. Okay. Jumping around to some of the other companies, continuing, we'll jump to cannabis. So Aurora out with their numbers, reported lower than expected fiscal third quarter revenue hit by pandemic-related restrictions in Canada. Separately, they announced a move in its U.S. stock listing to the NASDAQ from the NYSE, citing lower costs. Really interesting to see how the exchanges battle it out for some of these companies. ACB is their symbol. Then a tough one, folks. Aurora, we're down to 8.6% today. This thing, with the euphoria of some of the cannabis stocks, was as high as $18.98 just back in February, and that was right before their last numbers came out. The volatility in some of these cannabis stocks, yeah, let alone the euphoria that we had back in October of 18. This is a 3-year weekly I got now. You were back at the price of 120. Some of them just got bonkers, folks, out of works. Canopy Growth, they're up 1% actually this morning, catching a little bit of a bid to $22.37. This thing's really been struggling as well. You were up to $56 when the Reddit boys and girls got a hold of the cannabis stocks. We're back to $22.37 right now. The low that you're talking about back in December, we're actually below that level, $24.05. We'll put this thing on a 5-year weekly to see the action that we're talking about here. Next level, really, $20. You can see that we chopped around here for a while. We're talking about a low in COVID of $9. Don't imagine we're getting back down there. Might be an area to start dabbling again. We dabbled a little bit in Canopy and got stopped out when we had some optimism, maybe potentially around New York legalizing things. Look for these to run eventually, folks. But, man, the volatility, you know, the way to trade these is put your stops in place, folks, because you see the runs we've had. I mean, we're going back just to April. You had this thing trading at 33.08 on April 1st, and just like that, we're solid $11 below that price level. You give back 33% volatility persisting in a big way. And just like it, folks, we got the markets. It's not stopping. S&P's bleeding upwards. Look at this print from where we were. 8:30 this morning, we get initial thrust downward on those retail sales numbers to 41.25. Just below that, 41.22. And just like that, the market's taken off. We get the S&P's up 40 points right now, almost at 41.45. Tech stocks, a little bit of a different story, 13,221 right now. All right, let's see what else we got in equities in terms of what we're talking about. So that's pretty much it in terms of the earnings I wanted to go over. GE got a coverage with the buy rating based on some of the parts valuation. Let's see how GE is trading this morning with the market. Yeah, up about 1.3%. So let's check back to Disney, see how they're trading on their numbers. Disney continuing to drop, 169.34. We're down 5% right now on their numbers, basically right down to the flash low we had last night. We'll jump over to Coinbase numbers. Coinbase, look at that pullback. We're now down a full percent on Coinbase to 260. This thing spiked initially to 247 last night on their numbers. Not the kind of opening trading action that you want on Coinbase. And some of these moves, folks, on a company like Coinbase, all right, the moves can be substantial because the valuations are all predicated on this future growth number, which is just a multiple of a multiple of a multiple, which is why the valuations and the prices can fluctuate so much, because the market is struggling to figure out, number one, what's the growth rate going to be like in a company like Coinbase, when, of course, you can't expect Bitcoin's going to go up 2 times the price, 200%, and Ethereum's going to go up 300%, and Dogecoin is going to go up 26,000%. You can't expect that on a yearly basis, and the market's struggling to figure out where that future resides. Coinbase down about 0.5% in their first public numbers. DoorDash continuing to rise up about 11%. Check Airbnb down 1.3%. Stay tuned, folks. We'll be right back at the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P's up 40 points right now. We're going to jump to some crypto. So Elon at it again. It's remarkable, folks, in terms of, who knows what he's doing, who knows what his positions are behind the tweets that he's sending. But it looks like, at least on appearances wise, that he's influencing the market in a dramatic fashion on multiple different coins, on multiple different days as this persists. So last night you have Elon working with Doge developers to improve system transaction efficiency, potentially promising. The biggest problem with this tweet in my mind is that it actually means literally nothing. Tell me exactly what that means. Tell me the details of that. Tell me what they're doing. Tell me why it's potentially promising. Tell me what the developers are doing to improve the system. No, there's nothing that you can hold Elon to on that tweet. He might have one guy. He might have 2 people in his office that are developers, and he says, hey, what can we do with Doge? And they say, I don't know. We can look at it. Yeah, look at it. Make some looks into Doge and see if you can do anything to make the transactions more efficient. And Elon sends out that tweet, and then what happens? Doge jumps from a price of about 38 or 39 cents up to 53 cents, folks. You're talking about mammoth numbers percentage-wise on where that thing can go, whether it's even just backing things up one day, right? You're down at a price level. That doesn't do a good job. I mean, I pull it up on the Robinhood platform because they don't even have it on Coinbase right now. I mean, you can see it's just manipulation in a big way. And Elon's a very, very bright person, and he completely understands what happens every time he sends out that tweet. So just be careful in that market. All right, we get the Dow up 300 points just like that. All the markets bleeding upwards. Tech stocks a little bit struggle right now. Let's jump to some of those FANG stocks. Amazon up 1.3%, putting a little bit of a bid at 32.03. Microsoft shares up 1.6%. Apple shares right now up about 1% as well. We'll jump to retail. Target up about 1% right now. Walmart up 1.2%. And we're going to finish it out with, excuse me, where were we? Come on. There we go. I wanted to get into some of the retail numbers. How about clothing store sales dropping 5.1% after a 22% surge in March? Just staggering numbers, folks, on the retail sector. We'll see where we go from here. Stay tuned. We got Basil Chapman coming up with the opening call next. Fast Market at 11. Larry Pesavento, Steve Rhodes, Dave White, Tom O'Brien.